Hello, welcome from Trend Signal to our review of the data and events the week beginning the 12th of September. We've started the week on a risk-off move, started Friday, in fact started Thursday really with the ECB and lack of action on further QE or monetary stimulus. I think in the least perhaps ECB watchers were hoping, expecting, waiting for some sort of extension maybe to the QE program. Nothing forthcoming. We then had a speech by the Boston Fed President Eric Rosengren warning that a reasonable case could be made for a rate increase, which is sort of what we're all expecting in December, and also a warning that the economy could overheat, which rate increase, yes, we can understand that. Overheating implies having to sort of pour cold water over the economy, which suggests perhaps not just one rate rise, of course, but something that we haven't really discussed in detail or mentioned really before now, so maybe a couple of rate rises. But the probability, as shown by the FOMC countdown page on the CME Group website, suggests that a rate increase in September is still only 24%, whilst December expectations have leapt to close to 60%, with 12.5% of that considering two rate hikes by then. So it seems as if the market is set on December, and despite the rather hawkish view held by Mr. Eric Rosengren, I don't think it's going to happen in September. At least that is what the market is expecting anyway. Of course, it's the markets have this risk-off move. It was really caused by bonds slumping following, certainly first of all the ECB, then the Fed, but it's sort of more focused on the US markets more than anything else. But it's certainly woken up all the markets post summer sort of doldrums, as it were. We didn't get any spike in volatility or volumes, etc., over the August month, and it's post Labor Day really that things have kicked off again, as they tend to do. It's an unexpected event really that caused it, and it just goes to remind us all that it is the central banks that call the tunes, and on this occasion it was a member of the FOMC committee that actually voiced his concerns about the US economy and calling for an immediate rate rise. And again, known as a hawk, so not surprising in a way. Let's have a look at the events this week. I'm just going to broaden this a little bit using Forex Factory. We're going to look at some of the medium impact bits of data, because I think with the focus on central banks and the questions being asked by the markets doubting the commitment of the central banks, are they just going to be pausing, or they consider the effectiveness of QE and negative interest rate policies, and et cetera, et cetera. Some of the unintended consequences, I think, have been causing a bit of angst for some sectors and sections of the economy. So let's just have a look. So really our immediate focus is on Monday at 6 o'clock with another speech by a member of the Federal Reserve. This time this is by Lael Brainard, a lady, Lael Brainard, who is going to be discussing U.S. economic outlook and monetary policy implications in Chicago. So quite a topic of conversation there. She is considered as a dove and has previously stated that the next rate rise should be delayed until inflation more closely approaches the Fed's own target. But I think some of the more aggressive, hawkish commentators out there regard this as a potential event to the extent that if she says something that is in the slightest bit hawkish, it could raise the temperature even more in the markets. Other than that, we have our own central bank here in the UK, the Monetary Policy Committee meeting on Thursday. There we are post our rate cut last month with a particularly strong set of data over the last couple of weeks. I think it's almost inconceivable that we'll have a change in rates again this Thursday. So it is of less importance to a certain extent. Sterling remains quite strong on the crosses, despite the risk-off move in the markets, certainly holding its own against the dollar and other currencies for now. But that'll hold some interest. Other than that, the other sort of major bit of news, or what we can look for, is probably from the Eurozone. I'll just go back to the key high impact bits of data out, and the one we're going to focus is on Tuesday. We've got Mario Draghi speaking at 10 o'clock, and then we have same time we have the ZEW Economic Sentiment Indicator, which is a survey of the analysts in Germany. And it's not a particularly forward-looking indicator, of course. It's very much almost out of date by the time it's published, but it's quite closely followed. We're expecting a mild uptick from the previous month, but in light of what happened on Friday last week with a collapse in bonds and equity markets, I think that is already out of date. Regular crude oil inventories on Wednesday, Thursday last week, but it's now back on Wednesday, which obviously is its usual release time for all the crude traders. You'll need to make sure you're aware of that and put that one in the diary for 3:30. We've already discussed Thursday with the MPC, but we also have some key bits of data out in the US, which are the retail sales report and the producer price index, which is a sort of forward-looking measure of inflation in a way. The producer price index, that's cost of goods and services going into production. Certainly no threat there whatsoever to inflation. And also at the same time, 1:30 on Thursday, we have the Philly Fed Manufacturing Index, which, whilst like in the UK, manufacturing is of less importance than the service sector, or as they call it in the US, the non-manufacturing sector, but that will be closely watched as well. And then we finish the week on Friday with the inflation measure in the US, the CPI data, which should provide an update on the health of the American consumer and any pressures building there, but I still think it's fairly muted for now. Signs in the UK that inflation may be picking up, but it's still fairly muted in the US. The core number is the one we want to focus on, plus 0.2%. And we finish the week with the preliminary reading on the University of Michigan Consumer Sentiment number. Again, I think this may be a little out of date, but these readings are all quite forward-looking leading indicators, and so it'll be interesting to see exactly how that does fare compared to 89.8 previous month. 91 is the consensus there, and that too can affect the markets. That's it. Thank you very much for listening. Bye for now.
If you would like more information about trading the right way, Trend Signal is giving you the opportunity to see and hear about its services live at a free online seminar. Take a look at the Trend Signal website for the latest events and to book your free place. If you would like more information about trading the right way, Trend Signal is giving you the opportunity to see and hear about its services live at a free online seminar. Take a look at the Trend Signal website for the latest events and to book your free place.